Hi, Tony Zito here. I got another Baton Rouge real estate video update for you. Today I want to talk a little bit about where to start in the process of home buying. Over the years, when I work with particularly first-time home buyers, but even people that have purchased a home before, often wonder where's the best place to start. And what I always say is the best place to start is to find a lender. Now, there's a million of them out there. There's various things I'm getting ready to give you tips on to watch for. Don't always just shop rate. Of course, rate's very important. Now, there's no question about that. You want the best interest rate, but you also got to watch the fees, because there's a lot of different fees that can be put in to a home mortgage that maybe somebody can give you a better rate, but then you got to come up with a lot more money down. So the first thing to do is, if you're already working with a realtor, find out who they use. Maybe get one or two or even three names. It's always a good idea to shop around a little bit, at least two. And what you want to find out is what you qualify for. Now, there's a big difference between a pre-qualification and a pre-approval. The pre-approval is what you want. Basically, what's going to happen is you're going to give them some information. A lot of times they can email you a list over. You're going to need your tax returns for the last 2 years, your financial information, your bank statements, if you have a 401k, savings, whatever. They're going to need to know all your financial things. But they'll give you a list of things that you need. You get that together and you bring it to them, or you could fax or email it to them, whatever works best for you and the loan officer. And then you also want to give them permission to pull your credit, but you want to get a tri-merge pulled. This is very important because a lot of times what they'll pull is what's called an in-house, and that just gives you one credit bureau's opinion, or one credit bureau. You need all three. You need to see a detailed credit report, because this is what the lenders are going to look at. And a lot of times I've seen to where people have just gotten a single credit report pulled, and then when they pull the tri-merge right before closing sometimes, there's some things on the credit that got to get cleaned up, or may even shoot the loan down. And especially in today's very strict lending world, the guidelines are just extremely strict, and the underwriters are just coming up with things out of the blue that could prevent you from getting the loan that you want. But the real advantages and benefits for you doing this up front is so that you know exactly what you qualify for. You know what your payment's going to be. You know how much money you need down. And then you can go to your realtor with a letter, a pre-approval letter, and know the price range to look at. Another thing that I would tell you is stay within 3 to 4% of your price range. If you can buy, in the $200,000 range, don't be looking at houses in the 275 or 300 thinking that you're going to get a real lowball offer, because what the statistics are showing, and this is out of the MLS, is that sellers are getting about 97.5% of asking price. That's not to say that you may get some special deal on a house that needs a lot of work or whatever, but lowball offers are usually just a waste of everybody's time. So again, I just strongly encourage you to find a good lender, get a pre-approved loan, know exactly what you can qualify for, get a letter from that lender, and then go ahead and get started with your realtor. And on the next video, I'll talk more about how to select a realtor and how the process works. Thanks so much for watching, and have a great day.